Let's talk about Europe, because that meeting of Eurozone finance ministers tonight is going to be dominated by Greece and Italy now. Italian shares have rallied this lunchtime on rumours that Prime Minister Silvio Berlusconi could be about to resign. Italian 10-year borrowing rates had risen this morning to a record 14-year high, 6.66%, 3 sixes, as the fears grew that the country was heading into a deeper recession. Here's what Cliff Taylor, editor of the Sunday Business Post, told us earlier.
Bigger problem for the Eurozone overall is certainly Italy. It's a huge economy. It has 1.9 thousand billion euro, I know that's an almost unimaginable number, in debt outstanding on the market. Really, I suppose the problem is that investors have started to lose confidence in its ability to deal with that and in its ability to raise money. And the real dilemma for Europe is that they can't really afford to step in and bail out Italy in the way they bailed out Greece, Ireland and Portugal.
To Rome in just a few minutes, but let's go to Brussels first. Peter Spiegel, the Financial Times correspondent there, joins us. Good afternoon, Peter.
Good afternoon.
As the ministers fly in for this ECOFIN meeting tonight, they don't know what landscape they'll be looking at. Is there a real risk now that Italy will be forced into a bailout?
No, I don't think it's real, because it just, as your previous guest said, it's just impossible. I mean, it's too big to bail out. And there was this effort at Cannes last week to get Italy to accept a provisional line of credit, but the problem is the numbers are just so big, it makes it very difficult for that to work. I mean, the numbers being tossed around in Cannes were somewhere in the neighborhood of 50 billion euros. Now, that sounds a lot in comparison to, the Irish or the Greek or the Portuguese bailout, but, Italy's debt levels are so much bigger and the economy is so much bigger. I mean, it has to refinance 300 billion euros worth of debt just next year. So I don't think that's realistic. The fact of the matter is, in terms of economic health, Italy is not quite in as bad shape as certainly as Greece is or Portugal is, and its banking system is not as problematic as Ireland is. So objectively, it doesn't need a bailout, and I don't think it's going to head that way.
But they've got 1.9 trillion euro in debt. That's a bit of a problem.
It is. I mean, it's a 120% debt to GDP ratio, but, Japan has a 200% debt to GDP ratio. I mean, the debt is sustainable as the markets decide what debt is sustainable. There's not a point at which the tipping point happens. It's what the markets decide. And right now, it's a political crisis more than an economic crisis. I mean, next year, Italy will have a primary budget surplus, so it's actually able to finance its regular spending. It's just the confidence in the Berlusconi government right now has driven up the borrowing costs.
Yeah, but they've got the new central banker over there who's saying they can survive with rates on the bond yields of up to 8%. Now, that was completely unfathomable for the Irish and for the Greeks and the Portuguese. Would you agree that the Italians could take the hit?
Well, again, it depends on what the markets decide, to be honest with you. Because at 8%, Italy would have to do some much more severe cutting in order to survive. It certainly could survive. There are countries that survive at much higher borrowing costs, but that seems rather unsustainable to me, to be honest with you. I think most economists are saying current levels are even unsustainable. But the fact of the matter is, if the markets can be convinced that Italy is putting a serious reform effort in, and that the government can actually implement it, which is the doubt now with Berlusconi, I think you see those interest rates coming back down. And again, because the fundamentals of the economy are not really that bad. Yes, high debt levels, but again, primary budget surplus. It's got a big diversified economy. It is no banking crisis. I mean, the fundamentals are not as bad as some of these other bailout countries are. It's just the political crisis that is really weighing things down.
OK, well, that's a political crisis in Italy. But as I said, all the ECOFIN ministers are heading over to Brussels. There is an awful lot of uncertainty still about Greece. We have this issue over Italy now. Can we see anything concrete coming out of this meeting?
I strongly doubt it. I mean, frankly, we don't even know who's showing up. I mean, if Berlusconi does resign in the next 2 hours, Tremonti, the Italian finance minister, is one of the candidates as a potential successor. Obviously, the state of play in Greece right now is the extent of the Greek finance minister may be the next prime minister there, so he may not even be here. What they were hoping to do today is get this 8 billion tranche, the sixth tranche for Greece, out of the way. But it doesn't look like that's going to happen because they wanted to have this government of national unity in place and committed to all the austerity reforms. That doesn't seem like it's going to happen. The other thing on the agenda is how to give more firepower to the bailout fund, the EFSF. That is not really going to be completed tonight either. to be honest with you, it may yet be yet another meeting of people in Brussels that comes out with very little substance, and that is not what the market's going to be happy about.
We're getting used to those outcomes at this point. Peter Spiegel, Financial Times correspondent in Brussels. Thanks for that, Peter. Let's talk to Nick Squires, who is the Rome correspondent for the Daily Telegraph. We'll come to the fact that Silvio Berlusconi has a Facebook page in a minute, Nick. But first of all, tell us about these resignation rumours. How serious are they?
Well, yeah, it's been a day or a morning of fevered speculation in Italy. The rumours started filtering through early this morning, and the sources for the rumours that Berlusconi might step down were two fairly credible ones, senior journalists with two centre-right newspapers that are traditionally seen as being very close to the Berlusconi camp. One said that his resignation would come within hours, the other said that he would resign either tonight or tomorrow morning. Very swiftly on the back of those reports, one of them was a tweet, inevitably, but very swiftly on the back of those reports, Berlusconi has been reported as saying to his associates that he has no intention of resigning, and as you say, yes, he's put out a short message on his Facebook page.
Now, the fact that he's denying it means that at least the story is gaining some traction. Could this have been an attempt to smoke him out?
Well, it could be. I mean, there's a growing consensus in Italy that that he should go. It's no longer just the centre-left opposition or the unions or the sections of the press that are traditionally hostile to him. It's all sorts of people, big business, particularly dangerous, I think, for the Prime Minister. But we even had the head of the Anti-Mafia Commission, who's a government employee, say yesterday that Berlusconi's got no longer has any credibility, and that he doesn't have the will or the intent to carry out the reforms that have been demanded by the Europeans and by the IMF, and that he needs to go for the good of the country, that Italy is in the worst crisis since the end of the Second World War.
I mean, we were talking there with Nick about how the Italian economy is still pretty solid despite the massive debt that's there. What are ordinary Italians making of this? Berlusconi had obviously made a fair share of enemies over the years through his variety of scandals, but at this point now, has any residual support been ebbing away from him?
Yeah, I think there is support ebbing away from him. I mean, his approval ratings are down to 22%, which is an all-time low. But I mean, I think that your correspondent before was correct in saying that this is more of a political crisis than an economic crisis. I was speaking to an economist just now who was saying that there are long-term structural weaknesses, but the Italian economy is not nearly as bad as the Greek economy, for instance. I mean, Italians tend to traditionally have a great deal of savings, so there's very low private debt in this country as opposed to other countries who've had to have bailouts. So some of the fundamentals are okay. Having said that, there is a pressing need for somebody, and it's not going to be Berlusconi, to make structural reforms to things like pensions, freeing up the labour market, perhaps selling off some state property, encouraging competition. As I say, it doesn't look like we're going to do that, and that's certainly the consensus of the markets.